Some early signs that maybe inflation is maybe not coming down necessarily, but at least not increasing, right? So we have inflation and jobs data all ahead of the Fed meeting coming up next week. So a great opportunity to kind of pre-brief for what may be coming in the Fed conversation there next Wednesday. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is to leave you feeling more empowered after every interaction. And through these Thursday updates, hopefully really focus on the data that matters most and weed out a bit of the noise along the way. So again, we are primarily going to focus on inflation and jobs, and then we'll kind of wrap up our conversation here today with a question of the week around a Fed meeting preview. So let's focus on jobs first, and I'm just going to categorize the two data points we had into this jobs category here. So last Friday, we had the U.S. employment report come out, and it shows that we added 139,000 jobs. So this was good news in a way. It was more than anticipated and significantly different than the ADP employment report that we got on Wednesday. So we covered that a little bit last Thursday. This is the second time in a row where the ADP employment report was pretty significantly different than the employment report that we got. So there's a bit of a discrepancy happening here. This was happening for a while earlier this year as well, and we found out that basically the data kept getting revised as time went on. Actually, I think this was even into 2024. So keep that in mind as we're getting some of these labor market stats. We may see them kind of continue to be revised. We'll kind of keep an eye on that moving forward. But there's a little discrepancy in what's going on in the labor market. That said, we also had jobless claims come out today on Thursday, and jobless claims ticked up again. We saw 248,000 in terms of jobless claims here for the week, which was the same as last week, I believe. And again, a higher number in general than what we've been seeing. So this is where that kind of conflicting data on the jobs front is coming into play. This will be very important to watch as we move forward, and we'll talk about what this translates to for the Fed meeting here in a bit. But before we get into that, I also want to highlight the inflation side of it. So on the inflation side of things, we had CPI, Consumer Price Index, and PPI, Producer Price Index numbers come out yesterday and today. So CPI yesterday, we had come out up 0.1%, and the core number, which again takes out food and energy, also up 0.1%. Both of these numbers, core and headline numbers, were below expectations, kind of bringing some of those year-over-year numbers down a bit. And certainly a sign of maybe where things are going. Now, keep in mind, you never want to look at one data point for inflation or otherwise, but this is also going to be a big component in what we talk about here on the Fed side of things here in a minute. Fast forward to today, we had producer price index numbers come out. Both headline and core numbers for the PPI were up 0.1% as well. So similar story to the CPI side of things, actually the exact same number, and also both below the expectations going into the week here. So let's talk a little bit about how this all translates to the Fed meeting, which, by the way, is coming up next Wednesday. So be sure to tune in next Thursday for our market update. We'll cover retail sales. We'll debrief a bit on the Fed. And keep in mind as well, markets are closed on Thursday, so we've got a bit of a split week. But before we get into next week's session, let's talk about what we might expect. So Fed meeting and press conference are coming out next week. The press conference will be on Wednesday with the decision right before. And what we've seen most recently to highlight, let's kind of go to our data points here for this week, is that we have a bit of conflicting data on the employment side about the maybe some cracks that employment is slowing to a degree. And then we have some early signs that maybe inflation is maybe not coming down necessarily, but at least not increasing, right? Again, early signs on both. These data points in just a vacuum are not enough to tell the whole story, but this is all ultimately obviously what the Fed is looking at, and it's the data going right into the meeting here since the last conversation. So what I want to highlight is that I think that we're starting to see this, but there's still really no clarity and direction on either front yet. Maybe a little more on the inflation side of it. I think that's been a little bit more of a consistent story, that maybe inflation is not necessarily maybe cooling to a degree, but certainly not picking up at the moment yet. That could change. Don't at least don't quote me on that. But that part of it is maybe a little bit more solid. On the job side of it, a little bit more volatile, I think. Very early signs and nothing to really write home about quite yet, but something to watch for sure. So with all that in mind, I think it's very doubtful, and really the market is pricing in a lot of doubt around any changes in this meeting. I do expect that the press conference that comes afterwards will probably be a lot of the same rhetoric from the last meeting. However, remember in the last conversation, the big theme was that they kept saying that they expect higher inflation to come. We are not seeing that yet. Doesn't mean it can't come, but there really aren't any signs of it growing, going higher at the moment. And they expected a slower labor market, which is maybe starting to show some cracks of that. So the reason that I'm highlighting that is that in that scenario, if we did have higher inflation and a slower labor market, that is really conflicting data for them to figure out what they want to do. Because if they were to lower rates, the concern is that maybe that has an inflationary impact, although we could talk about that a different time. But obviously, if they raise rates, it could have an impact on the labor market slowing even further. So if we have higher inflation and slower labor market, that is the conflicting data for their decision. However, with what we've seen more recently, and not really any signs that inflation is actually picking up as they had expected, if inflation does stay where it is and does not pick up, and we have a cooling labor market, there could be a little bit more of a clear path to lower rates. But not yet, to be very clear. I don't expect that to happen in this June meeting. Maybe something as we get through or past the summer months is kind of what the market is suggesting and what I might, kind of lean on as well, which gives plenty of data to see whether inflation does pick up or not, and how the labor market shakes out as well. So just keep that in mind. I think the general theme is that I don't expect any changes in this Fed meeting, but I think that the general rhetoric will stay the same, except that I'm wondering how they address the inflation side of it, because that's been the big shift, is that they expected inflation to increase. We're not really seeing it at the moment. And so that may give, again, a more clear path towards lower rates as time goes on. Not yet. So hopefully that's helpful. We'll talk next Thursday about exactly what was covered in the press conference and what came out of the decision. But in the meantime, I hope you have a great upcoming weekend. We'll see you next Thursday at 3. And do keep in mind that we do have a closed market for next Thursday for the holiday.